What's the most important skill set you can develop as a trader? Well, it's managing your risk. So where does one start? How do you build out that framework to apply to your trading? Well, let's go through an example. I'm going to take you through a quick example here, start to finish, as to how to implement that into your trading routine so that every trade that you enter, before you enter, you have a game plan on how you're going to manage that risk, okay? So risk is a function of your account size, okay? So let's go through an example of a $50,000 account. Let's say you've got a $50,000 account you're starting with, and you've answered the question of what is the percent that I'm willing to risk of my account on a per trade basis. And let's say you say you're willing to risk 1% of your account balance, okay? 1% of a $50,000 account is $500, okay? So now you've established that you're on each trade you're willing to risk $500. Okay, so what does that look like on your futures chart? Well, it depends on the instrument you're trading, right? I like to trade the S&P 500. I'll trade the NASDAQ. I'll trade the Dow every so often, not very often, but sometimes I've been known to dabble a little bit. But primarily, I'm trading the S&P 500, which is $12.50 per tick. Okay, so if I'm trading a one contract trade, that means I can place my stop at 40 tick loss. Okay, my stop loss at 40 ticks. On two contracts, it's 20. On 13, on three contracts, it's 13 and a third. On four, it's 10. On five, it's 8 ticks worth of risk. Okay, so now we've established what our risk profile is on a per contract basis. Now let's go apply it to a chart and see how that works in the real world when it's not so cookie cutter like this. But this gives us a framework to operate from, okay? So let's say I am wanting to play this double bottom right here at this purple line, right? So price is coming down. Let's say I don't see any of this. And when this bar closes right here, I get the sense and feeling that after this 8:30 opening bar here that we're going to go to the upside, and I want to play it off this double bottom right here. Okay, so the second thing I'm going to do is I'm going to go and get a tool that is free of charge in the NinjaTrader library. It comes with your profile. It's called the Risk Reward tool, and you can set this thing up however you like. So let's say at this bar close, I get in right here, 42.06 and a half. And I'm going to measure down to here to this double bottom, okay? Let's say it's a 12 tick risk so far. Let's give it a few points to breathe here. Okay, so this total trade is a 15 tick risk, okay? So let's go back here. How many contracts can I trade? Well, on a 15 tick stop, I can trade 2 contracts and be well under my profile, or I can trade 3 contracts and I can be a little bit over my risk profile. That's how you structure your risk profile and how many contracts you can trade on a per trade basis, right? Now comes the targets, right? So it depends on what is in your trade plan, but let's say initially you're looking for, you're scouting for trades that where you can capture a 1-to-1 risk reward ratio. Okay. It depends on what you're using. It depends if you're using a 1-to-1, 1.5-to-1, 2-to-1, 3-to-1, 10-to-1, whatever your plan is looking for. But as price is coming down into this trade or into this setup right here, what I'm asking myself is, can I at least squeeze a 1-to-1 ratio out of here? If the answer is yes, I'm probably going to pull that trigger, but typically I'm going to want at least a 1.5 or a 2-to-1 risk reward ratio to make my risk capital worth it. Okay. So, and in this tool, you're able to set that up. I set it to a 2-to-1 ratio. You can set it to a 2.5. If that's what you're looking for on the high end, you can apply that. Then you got to set your target out at 38 ticks. You want to do a 3-to-1. You can set that out there too, 45 ticks, so on and so forth. Now on this trade, on this double bottom, you could have actually gotten a 3-to-1, probably a 3.5-to-1. Number 3, third thing you need to do and integrate into your risk management skill set is the ability to cut your losers. Cut them quick. This one took off within a bar. So let's say I entered right here on this bar. It dipped a little bit, wicked, and then came roaring right back up. Okay, so let's say this thing chopped around for about 3 or 4 more bars. Cut it. Get rid of it. Get loser. It's not doing what you think it's going to do within a reasonable time frame, in my opinion. So I would cut that loser and get rid of it. But lastly, your number one job as a trader is to preserve and protect your capital. This is how you do that. Map out your risk profile, map out your target profile, and start qualifying your trades through that risk management filter before you enter. Hope that was helpful. Good luck out there. Happy trading. If you like this and you want access to the tools, check out Ninjacators Fast Track with the link below.